Welcome to TradeTheMBI.com. This is John. This report is for the 31st of October, and Halloween it is, and we don't really have much scary going on here. I mean, we had the nice push. We talked about this from the readings that we were expecting a bit of a retrace, and it was a pretty decent one right back into the middle of it, and pretty much just put us right in the range. You had the short covered, but there wasn't any real impetus to drive things. You've had a sharp increase in short-term buyers, but they were already up here from way down below, and they kind of, spent their load, so to speak, because we really haven't seen much past the 7.5 going back through all these rallies for steel. And so as we got close to it, a little bit of a taper off. But the shakeout has turned around in the right direction from the lower. Now, the problem here becomes if you make a lower high, then I would expect a much deeper pullback. So that's going to be the look at this particular point going forward, particularly such so dramatic turnaround in shorts jumping in on the potential news from special prosecutor, blah, 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 yada, yada, all those things back and forth. But at the end of the day, fundamental-wise, things haven't really changed a whole lot. So it's a difficult one for shorts because normally you would have to see some driving factors, whether it's a slowdown or some other view, and tax reform failure could be that, but it's a little too early for that. So we got the 5th of the month coming up shortly after the week gets going here, and so by the beginning of next week you have a whole other set of influxes that could have significant impacts. So we'll have to see what the readings are. That we've got pretty decent levels. Euro's still holding well above that inside range, pretty even there. In fact, it's time to start just increasing the size of that because we sort of passed that original up move and begin to see the slow taper that we've had in the shakeout here. And this kind of mimics where we're at with the U.S. market. We've had this little dip, and then the question is you start making lower highs, and then you begin to just fade off a little bit. It hasn't been anything serious, but it's just worth an indication. So got a flight to quality, driving TLT back right up there. Again, that's going to be a tough sell as we start to see rates outside of government start to rise, and that is just going to put more budgetary pressures on things, which is an interesting one, which you can understand why then they have promoted that no growth policy for the last decade, just to make all their excessive borrowing cheap. You can borrow an extra $10 trillion when you're not having to pay a whole lot extra on it. This boost in oil, this is not about regional conflicts or anything like that. So this is about potential increase in demand issues, and that even with the supply that exists out there, I think is a net positive for economic growth around the world, and that is only going to propel things, which will change the multiple. And until people can realize that market multiples change based on inflationary environments, if you don't understand that concept, you're not getting why the market is where it is, and you think that it's extremely overdone, and it's not. So that's, these are the fallacies of thinking, and that's okay. That's what the markets are all about. Half the people are going to say it's going to crash, and they're selling everything, and the people who think that it's going to keep going up, and that's how it works. And gold, still not catching a bid yet. That's probably going to change in the not too distant future. I think that you've had a lot of manipulation within that, but there's still a lot of central banks in that buying up the reserve of gold that exists, which I think is a very interesting confluence. At the same time, prices are being, it's not cheap by any stretch of the imagination. It's still not at the historic highs that we were at. So when we turn quickly to the 5K chart, we can see that the decline started after these peak moves. We moved across. We ended up getting very close to a secondary burst of that. We ended up with a DOC spread right here. At the same time, we ended up with steel crossing below, and those confluences happened right together right there. And that was at the 75 range, and then we dipped all the way down here to the 65. So it was a nice move, and then we finally ended up with the dips below the red line, which we could see in the 6 and 7 right there, and boom, this is off the ABM DOH right there that gives that change setup. And we pretty much haven't gone anywhere with that. I got the bicycle, we've just been going back and forth sideways on it, and that's just because we never got a reset of the steel. The closest you had was the move that went to plus 13.5, but that's a weaker view than when it's all the way coming from underneath like it did at the beginning of the rallies over here when we were really driving. So you begin to get that fundamental relationship versus a sideways action move. It doesn't mean that these can't rise, and sometimes they'll rise fairly decent for 6, 7, 8 points, but true trend moves tend to have your steel on the lower side of the situation. Not to mention inverted, you also would have cyan down below red, and certainly would have red in that spiking back up over zero, and that's not happening at this particular point. So we got a little bit of action taking place right here at the beginning of pre-market area. So all in all, I think that we're probably going to end up with a pretty flat even, but the reality is for the entire month, it's been a big move. When you look at the beginning of October right here, no complaints with that. That's pretty sizable. And when you have the bias that you do for year end to the upside, I think you have to be pretty optimistic about where things are, and particularly if you see any continuation of economic growth, or even if they get close to getting a tax thing through, we really could see a strong end of year. And I think the volatility is going to start to increase now that you're getting into these phases, because people have to rotate, and that's going to cause a degree of movement regardless. It just has to. So don't get too complacent watching these slow ranges for now, because we've already started to see a little bit of an uptick, and I think it's time to expect a little bit more of that. Indicators will be going out a little bit later today, so they'll be all set for the first. As always, though, trade well. Talk to you later.